I traded an Iron Condor today, and that's an option spread for the most part, where you are selling a call spread and you're selling. I want to get the terminology right. Let's go to the trade. Let's go to my analyze. This is the trade right here. So yeah, I'm selling a call spread above the market, above the charts, and I'm also selling a put spread. So I'm getting credits on both sides, basically saying that the stock is going to stay between this price and this price. Now, I usually don't trade Iron Condors because they are slow process to making money. And a lot of times you also start losing money right away before you start making money because the curve, the curve, the theoretical curve, whatever that's called, this purple line, it's just not lined up. So you can see right here, this is the trade I got on right now. And right now, Google is trading at this. Yeah, I think that's 1210. Let me go to the charts. There it is at 1210.56. So here it is. And then see, I'm making right now, if you look at 1210, I got the trade going on. And it says I'm up 33 cents. But each day, if you look at my theta, that's what I'm going to be making a day. $18 a day on this trade. So basically, what is it? So I sold a call spread at the 2030 and 2040. So let's go back to the chart. And let's look at this. What's up, Errol? How you doing, man? So 12, we talking about Iron Condors, Errol. So 2030, and I'm trying to go live because it's just easy to do. You know, I don't have to render, but I'd be nervous as hell, man, talking about this stuff because I don't usually talk about it. I talk it to myself. So what did I sell here? The analyze. I'm going back. 1230, 1240. So someone here, I'm going to draw some lines here. So basically, they rough lines between there and, you know, that's the 1230. Wow, this is tight. Somewhere in there. Okay, basically I'm saying Google is not going to go any higher than that, okay? And then also on the downside, let me go back to the Analyze tab. It says 1150, 1160. So on the puts, right here, right about here, I said 1150 and, well, actually 1160. I basically said, come on, there it is. Click! There we go. I basically said over the next, gotta see how long I put this trade on for. April 26. Basically over the next 10 days. That's a little bit more than that. Let's see where we are. April 26. Over the next 18 days. Okay. I got it together now. Over the next 18 days, that Google's going to stay in here somewhere because I just don't think, and this is before it actually reports earnings, I'm not sure that it's going to break an all-time high. I mean, 1200 it's doing pretty good right now. It's not running like Amazon. Look at the slow stochastic starting to turn. Look how these are the Bollinger Bands I got on, going around at all these little lines, and look how it's kind of giving it back up before it touches the upper Bollinger Band again. So I'm playing that it's going to actually come down before it goes back up. Kind of something like this, you know, kind of hang out in this box a little bit before. And if it does that, I start to make money and I can get out. Get the hell out. I don't know if it's going to bust through. It may, and I might have to make an adjustment. So if you look at the analyze time, so basically if it stays in there before April 26th, I'm going to make $820 because I sold 2 of these. And if it doesn't, if it comes out beyond that range, this is the range where it kind of comes down. If you look over here to the left, it says I'm going to lose $1,180. Either side. So, but as long as it stays in here, I'll make $820. But I don't plan on staying there. And that's at the end. That's when it expires that I'll make that much. But if you look at the theta here, and that's how much time decay is happening. I'm making $19 a day right now, all right? So if it's kind of tomorrow, it's in here, it's another $19. You know, just keep adding up the $19. But if it starts to move hard, you can see this purple line, I will start to lose money. So let's say tomorrow it opened up $10 to $12.20, and then see there, I'm down $123. But it might not be that much because of the $19 of time decay I'll get. So it'll probably be something like 110, right? But if it opens tomorrow, say at 1200, I'll be up about $60 or maybe $80 with the theta. So that's how it goes. If you can come here and this is the date. This is today's date, right? So the purple line, the turquoise line is the date. That's what the curve is going to look like when it expires. So if you push this up, you could see how the curve is kind of going up, and basically my profits is going up. So say it stayed right here. I already pushed it up to April 20th. I will be up $374. And you keep pushing it up, and you can see how each day it takes the shape of that curve. Right, so let's go all the way back down. Let's go to today. There it is. So it's a slow trade. It's a high probability one. I was really afraid, the market's been running, so I kind of covered it more on the downside. I didn't give it a lot of room to go up. And I could be wrong on that. It's making me go, I don't know. But I'm just thinking it's going to come down before it goes up. But if it's a stock like Amazon, that's my favorite stock. I mean, look at this thing. See, if it's stock like Amazon, I'd be putting it up here somewhere. Like, yeah, it's going to be up here and, in this range, something like that. Because this stock is just running. And you can see how it's pushing up towards the upper Bollinger Band. Now, remember, Amazon and Apple are both like a fang stock. And then look how Google is weak. It's actually coming back down. So it's not really finding the same, juice or whatever that the other fangs doing. Let's look at Facebook. Let's look at all the fangs real quick. Facebook is giving it up, but it's already on that top upper Bollinger Band. It already been there, done that. And Facebook and Apple. Facebook, Apple, Amazon. Yeah, that's it. No, Facebook, Apple, Netflix, and Amazon. Let's look at Facebook, Amazon. Okay, Netflix. Let's look at Netflix. Oh, Netflix is like perfect for an Iron Condor because see how it's not moving? It's not moving at all. You can say, oh, it's going to be somewhere between here and make money off of it. It's just kind of hanging out. This thing is going to pop hard on earnings. I'm afraid of Netflix stocks because I think the service sucks, but for some reason everybody likes it. Anyway, and Apple, if you use Fang with 2 A's, some people's been including Apple, and now you can see Apple is pushing above that upper Bollinger Band, right? It's just pushing up, nice daily bar that's making a nice full size. It opened on its lows and it's just going higher. You don't believe me? Let's look at the minutes. And there's the minute chart. Here's today. It opened right there and it's just slowly going higher. Back to that Google, and you could see how weak it is compared to its counterparts. So I think it's a good trade. My Iron Condor trades suck. I don't do them, but I decided to do it on this one because I was going to sell just a straight up deep out of the money put spread, basically saying something like, I don't think Google's going to go below somewhere way down here in a wide range. So like a 20-point put spread. You're probably like, what is a 20-point put spread? Meaning I sell, say, the 115 puts, and then I sell the 1115 puts, and I buy the 1095 puts for protection, right? So that's a 20-point wide, meaning I could lose $2,000, right? But with the credit I receive, which would probably be close to around $200, $150, it's not quite 2,000. It's more like 1,800, 1,850 or something. I didn't put the trade on, but it would be something like that. You're like, that's crazy, man. How you gonna risk $2,000 to make $100? That's because the probability is high. Most likely, I'm going to be right. It's almost like free money. Hey, you know what? If you get this right, if we know you're gonna be right? So, but if you're wrong, we want $2,000. You know what I mean? So it's like free money. That's how it kind of goes. It's all about odds and probabilities and whatnot. So, I play around with different spreads. A lot of that's my favorites is just straight up verticals, call spreads, put spreads. Maybe buying them like in Amazon. I'm buying them and selling because when these stocks start to rip, you got to take advantage of it. When they ripping, how you take advantage of it? The fastest call spreads. Buy calls and call spreads. I don't like buying calls because you lose money. Remember I showed you about the theta and the Google. You lose money, so you always want to sell something against it or just sell options because options generally expire worthless. And if you sell it to somebody, you're selling somebody something worthless and you keep the money. You see what I mean? So, but when they running, hey, they make some serious money. Orange juice. Anyway, so I just wanted to do a quick video. Thanks, Earl, for checking me out. I like doing them live, like I said, because it's quick. As soon as I press end, I'm done. But then at the same time, I like to edit my videos. I like to, I want to make sure I speak the right talk. But at the same time, I don't care that I'm clumsy with the language or I'm trading. I like looking at stocks and it's fun. I'm just like, hey, this is going to be a great trade, though. I didn't even know. No, hold on, wait a minute. Not Amazon. What was that stock I was looking at? Netflix. Don't pull up. That's going to be something else. Whichever this. Hold on. Let me clear this out. All right. Let me clear out the Bollinger Bands, even though I should keep them there. Studies. Let's edit studies. Bollinger Bands. Get rid of those. Okay. So I just got a couple of moving averages, the 9 and the 50. All right. So. See how it's consolidating? This stock hasn't been doing anything since basically the beginning of the new year. Just a little choppiness up and down, just sideways. This stock moves. This stock will never, it doesn't do this. So that means it's consolidating. There's a lot of pressure built up, and whichever way this thing breaks, it's going to be hard, and it's probably going to happen in our earnings in a couple of weeks. So if it breaks these bars, that's the way you probably want to trade this, as a continuation. It will continue to go that way because of all the pressure that's being built up right here. These are the best trades, consolidations. Look at over here at August. This is a little consolidation, even though it's going up a little bit, little upward trend. Let's see how tight and narrow that is. And then look what happened when it broke. Look how it just broke down hard, right? So you want to look at these sideways is the best because no one's making money, right? It's all this bunch of chop. It's consolidating. And when it moves, it's going to go hard, So I keep an eye on that. These are my favorite trades. I say I'm gonna coin this term. I say, look at that shelf. Put a cup and a plate on that thing. That means you could stack things right here, because it'll hold it steady. If it's looking like this and you can put things on it, oh man, yeah. Like I said, my favorite stock, my first stock that I put on the channel was Starbucks. It was a 2-year shelf or something. This is it right now. Look at that. I told y'all about this stock. I told y'all. Look at this. Remember? Do you remember? Look at this shelf. Let me go to the monthly. Do you remember me pointing this out? Go look at the video. Let me draw this line out. Look at that. And the longer it is, and this was 1, 2, 3 years. Let me tell you something. This is still gonna blow. It's just getting started because it was 3 years. And look, first you had to fake out before the breakout. I thought it was going to break down and keep going hard, but it reversed hard and it just keeps going. Look at that. Look at that. How it just broke out of there hard. So that's what's going to happen to Netflix. Even though Netflix is not a 3-year consolidation, this is crazy. That's 3. And then look at this right here. Same thing. If you come down here in 2006, it's a little downtrendy-ish, little downtrending. Yeah, let's kind of, but look, it's now consolidating, and then boom, just blows out of there. This is not really a consolidation, but when the trading gets narrow and it reverses it, those are good trades. Those are good trades to put on. You could sell some puts below this, once it takes that reversal, and maybe buy some calls, call spreads, do everything. Calls, call spreads, sell puts. That's me. I'm all in. I'm doing all kinds of different trades, when something is going my way. I'm currently in Starbucks, the stock, not the options. One of my favorite trades. I caught some of it, but I'm like, oh man, I got out. I should have just stayed in it because it seems like it's going too hard. You expect it to go hard, but it's going too hard. Look at what the market is doing. So you compare that to to the market. It's just it's different. So it just seems like it's gonna. I want to wait for that pullback. Let me go back to Starbucks one more time, because in general, it doesn't do this. It likes to check back. And I guess that this red candlestick right here, that was the check back. That was the check back. I'm trying to look for it. Where is it at? Right here. This was the check back. It blew out and came right back down, and then now it's taken off. And this is where everyone should have got in. So it's gonna full steam ahead. Who knows? There'll be some checks and check backs and stuff, but it's off to the races, man. That was a 3-year consolidation. That's huge. That means nobody was making money for 3 years. You know what? You can't buy at 50. You need movement. So if you buy it at 50, right? How would you make money? You have to sell it higher than 50. Well, if it's always 50, you can't make money, right? It's been 50 for 2-3 years. So nobody's been making money. You might sell for 50, buy 50, sell for 51, things like that. It's just crazy. So anyway, that's my trade. Google. That was my trade. Starbucks, but Google. Yeah, let's see what happens. I generally suck at these, and especially another thing why I favor the downside, because Google likes to go down hard. See these little hard, just like these checkbacks, like here. This one was 1141 and went all the way down to 1093. So I'm waiting for another one of those. So you see that, and I think the same thing is going to happen here. I usually suck at them, but let's see. Let's try it out. So here, the reason why it's 820 because I sold 2 of them. It's really 410, and I'll try to get out when it goes to half. Just give me half of it. So is it? I can make 820. Give me 410. Matter of fact, give me 300. That's what I got it in for. $300. Just give me 300. I'm not trying to be greedy. Just want to make a little bit, and then that's how you kind of get out before disaster happens. Just make a little bit, and find another trade. So that's what's up. That's what's going on. That's it. I'm going to go ahead and close it out. Wish me luck on this trade, and let me know how I'm doing. Let me know how you like the channel, the new channel, the talking these stocks, and do you like this? Do you want to come in and talk about a stock? Put it down below. We could talk about it. Maybe I can see a trade in there. And yeah, let me know what you think. Thanks for watching. I am Dre, and this is Dre. Market's closed. It's time to check my profits. I'm out.